Direct joins us for a bit more on the performance of the Aussie market. Don't forget you too can join in the conversation with a question or a comment. If you're on Twitter, just use the hashtag MarketDay, or you can email us at yourmoney@skynews.com.au and we'll try to answer your question for you. Julia, the market really did shrug off both, I guess, that better than expected economic data we saw out this morning, retail sales and building approvals, and that Bank of Japan decision. What's weighing? What really kept us down today?
It was risk-off for the Aussie share market. We were down by 0.9% and really not much of an impact from both those pieces of positive news. That should be good news for risk assets. The fact that we saw economic data better than expected, with signals that perhaps we have seen now the consumer bottoming out, and we've seen some positive signs in both retail sales as well as building approvals. And then, of course, Bank of Japan, the asset purchase program, 7 trillion yen per month. And if we have a look at what happened on the Japanese market, we saw the Japanese stock market going higher, we saw the Japanese yen weakening. So the market's really getting behind that Bank of Japan decision. But here in Australia, we saw red across the board. Every single sector was trading lower except for one, and that was the staples area. The area doing the most amount of damage once again was the material space. And that wasn't surprising given the fall that we saw in commodity prices last night. We saw oil prices down by 2.8%. Oil inventories in the US are at the highest level in about 22 years. We've seen precious metals once again decreasing and copper prices down as well. In fact, for every one stock that rose on the market, we saw 4 decreasing on the Australian share market today. So all in all, a pretty weak session for the Australian share market. This is what the intraday graph looks like today. You can see that we were off to a pretty good start in the morning, but once again, it was all downhill. We did see a slight uplift after that Bank of Japan decision. We were making losses of more than 1% at one stage, and we managed to lift off that after that Bank of Japan decision came out. But at one stage, we even looked like we may break below that 4900 point. We managed to gain above that, and we have seen a close above that, but altogether it was a pretty weak session. Volumes also pretty light, $4.1 billion worth of stock being traded, but that's understandable given that China is on holidays both today and tomorrow, so we were expecting to see a relatively quieter day on the Aussie market.
Taking a look, you mentioned commodities falling again overnight. Silver and gold both starting to look pretty technically bearish at the moment, and gold stocks getting punished yet again on the market today. Newcrest off another 5% or so. Where do you see things heading from here? Do you see gold continuing to fall?
There's some really severe sell-offs on the market today in that gold space. We saw Silver Lake down a massive 17% in one session. Resolute Mining was down by 11%. We saw Kingsgate down by around about 10%. So we're talking some big falls for the gold miners. Now, really driving that is the fall that we have seen in the commodities price, the gold as well as the silver prices. And technically, they're at very vulnerable levels at the moment. If we have a look at gold prices, this is a 5-year chart. You can see that we're right at this support level, and we look like we're breaking below that at the moment. So the next couple of sessions is really critical in terms of the gold price, that we manage to retain that support level. Otherwise, more weakness does look like it's ahead for gold prices. We're seeing the same type of pattern in terms of silver prices. If we have a look at silver, this is the last 5 years. You can see this descending triangle, and just watching that bottom support level to hold. Otherwise, we may see some more weakness there. But this is a trend that we've seen all year. We've seen gold prices down around about 7% in 2013 so far. Unfortunately, the gold space has tumbled more than that, and we've seen a fall of 23% in 2013. So those gold miners really doing it tough in 2013, and certainly doing it very tough on the market today.
Does end up being divested by Shell at stake in Woodside. What, I guess, who potentially could be a buyer out there?
Of course, there's been a lot of speculation that BHP Billiton could be a buyer. We know that it has significant oil and gas interests, so we'll be watching to see whether that may be the case. But of course, a lot of these material-based and commodity-based companies, instead of spending up and making acquisitions, have been battening down the hatches. We've been seeing divestments of non-core assets. We've been seeing a delay in some of the key projects as well. So not a lot of money splashing around in that area at the moment. So watching that space carefully. And I guess there's 2 key questions in this divestment of Shell's stake. Number one is the price that it gets it away at, and if it's close to market price, that would be a positive for such a large stake, 23.6%. And secondly, whether it is just one significant buyer, because that would put into question, I guess, Woodside Petroleum as a potential takeover target as well. And that sort of question has been talked about by the markets for close to a decade, or probably even more than a decade now. So watching that space closely, I think tonight one of the key things to watch for the Aussie share market is going to be how those commodity prices trade, especially given that at the moment we are seeing a lot of activity in the FX markets. And just as we've been speaking, Liz, we've seen another drop in the Aussie dollar. It's been pretty dramatic just over the last few minutes while we've been talking. So the Aussie dollar continuing to weaken off, the US dollar continue to strengthen up, the Japanese yen weakening, and of course that has negative implications for commodity prices tonight.